Hey everybody, happy Friday. Welcome to another episode of What the FICC. What the FICC, man? I am Spencer Israel. He is Ian Cully, head of fixed income, commodities, and currencies at All Star Charts. Mr. Cully, how is your week going?
Feeling good, man. Little hungover from the chart summit. I'm not gonna lie. A little hungover from chart summit, ready for the
Hungover
weekend.
in a metaphorical sense, of course.
Yes,
Obviously.
in a metaphorical sense, absolutely. Lots of
Obviously.
charts, lots of content.
Obviously.
Good time.
Well, yes, there were lots of charts, but we did save a few for you guys today. We're talking oil and we're talking wheat. Why are we talking about those two things together?
Well, the reason is oil tends to lead wheat at significant troughs, at significant bottoms. And I really want to set the record straight because earlier in the year, I wrote a post claiming or looking at wheat for signs of the next directional move in crude oil. I got it backwards, Spencer. It's the other way around. So I want to dive in, show that relationship today, and then take a look at all the individual wheat contracts: Chicago wheat, Minneapolis wheat, KC wheat. Look where what might be bottoming and where we want to go fishing.
Where do we want to go fishing? Bottom fishing.
Yes.
It's dangerous, but man, is it fun sometimes. All right. Let's go to the charts. What do we got here?
Okay, first up, overlay chart, crude oil and Chicago wheat, going back a little over a decade here. And we see in January, February 2009, crude oil put in a significant trough and ripped higher. Now, about 9 months later, in September, Chicago wheat, September 2009, Chicago wheat put in a low. Now, yes, it went on to later, almost a year later, and put in another low before ripping higher. But as you look in February of 2016, saw another significant low in crude oil, followed by another significant low in September of 2016 in Chicago wheat. Fast forward to 2023, crude oil stopped going down in March of this year, right? Break into new year-to-date highs, challenging that 93 level, finding some resistance there. Will wheat do the same? Will wheat dig in and start to catch higher? I like the way the Chicago wheat chart looks. We'll take a look at that here in a few minutes. But first, let's check in on crude oil, finding resistance at a critical polarity zone around 93.25. Looked like it was going to break out earlier this week. Had some corrective action yesterday. I kind of see some more downside follow through today. It makes sense. It makes sense. So for now, I see the range for crude oil between 93 and 83, roughly, right? We get decisive break above 93 and we get back up to 115. But I don't want to talk about 115 or 120 or that $100 roll in crude oil till we decisively get back above that 93.25 level. But what's definitely bullish or constructive here is looking at that 14-day RSI. And it's been improving since March, since it bottomed. And we've got multiple overbought readings since this summer. Three overbought readings, I believe, since late July, early August. And that's what bull markets do. They get overbought, and they stay overbought. It's a key characteristic of an uptrend. And that's what we're seeing in crude oil right now. Now, moving on to Chicago wheat, I wanted to zoom out, show the monthly charts, kind of you get big picture of what's going on in these individual wheat contracts, and then kind of move down the time scale or time period to the daily charts and highlight some levels. So not really worried about the actual candles themselves or deriving any kind of information from those because we still got how many more hours do we have here, Spencer, before we close out September?
Depends on which market you're looking at, doesn't it?
Yeah, we only have a few more hours for Chicago wheat. And it looks like it's closing below 628, which it's a key level. I want to see Chicago wheat reclaim those former highs I know from the mid 90s. You're like, Ian, what do you care about those former highs from the mid 90s? Well, it's a level that price is respected.
It's a long time ago, man.
I know it's a long time ago, but hey, price respected it back in 09, respected it, in 2011, 2012. We see price respecting this level, and that has my attention. So I want to see it get back above 628, 630. And what's interesting is we zoom in on the weekly chart, price is falling back and retesting a critical shelf of former highs, 2017, 2018, and 2020. So this is a logical level for price to find support, and that is the principle of polarity in action. So there's multiple ways to play this. If you want to go bottom fishing, Spencer, if you really want to do this and try to pick the bottom in Chicago wheat, it's as simple as trading against that 570 level. Just get long against 570 and hold it. Keep rolling it. Keep rolling that contract into the summer of next year, as long as that trend remains up. But if it's below 570, all bets are off. Now, zooming in on the daily chart, looks like a potential double bottom. Potential double bottom here with a key breakout level. Again, if you want to wait and buy strength, you can wait and buy a potential year plus bottoming formation in early spring next year. That breakout level is going to be up near 780. What I want to point out here, it's really important. I love my 14-day RSI, my momentum, and we got that bearish to bullish reversal in momentum. And momentum has a tendency to lead price action. So possibly we get a bearish to bullish reversal here in price as well. I like it. We're in a bullish regime right now. Again, as long as it's above 570, if you want to get in there, risk is really well defined. Below 570, we know we're wrong, and we're out. Now, moving on to Minneapolis wheat. Let's see here. I'll move on to KC wheat first. KC wheat doesn't look as bullish. Right back, below this 756 level. Now look at the 756 level here. This retracement level on the monthly chart. Not as much price action. I mean, yes, price respected that level in early 2022, but beyond that, there's not a lot of information in that level, right? And it's going back over a decade. I'm not interested in this 756 level. I don't want to use this as a level to define my risk. When I see Kansas City week, I see a market that's in a downtrend, still in a downtrend. So let's see here. And then when we look at the daily chart, which is really interesting, doesn't look anything like the Chicago wheat chart. Nothing. Bearish regime. Now, when a market's in a downtrend, what does it do when it comes to momentum? This 14-day RSI gets oversold, and it continues to get oversold. So it's on the verge of getting oversold again. Right? This is characteristic of a downtrend, and Kansas City wheat continues to press towards fresh lows. Not interested in picking the bottom here in Kansas City wheat. And there's no level to trade against. There's no level to trade against. Give it time. Maybe, potentially, it's carving out an inverted head and shoulders or some other form of a bottoming formation. We'll see. But if and when it gets above 916, look, market testing that level multiple times. 3 critical pivot highs here at that 916 level. That's a market telling me that level is important. So if and when Kansas City can get back above that level, get long.
That's an awfully long ways away.
It is a long ways away, and that's the thing. Maybe between now and then we'll have a level to trade against, but for now, that is the clearest level to define risk.
Okay.
All
All right.
right. Now moving on to Minneapolis spring wheat. Got a similar picture. Similar picture here. And what I want to point out with this chart is we've talked about this before. We're moving into this next, commodity super cycle. What we could witness for a lot of contracts is a new range, right? Here we see back in that from 1995 to 2005, and 2005 is about in the middle of the last commodity super cycle. Minneapolis wheat completed a massive base, broke out to new all-time highs, has now been trading in a new range, slightly higher than the one before. The floor used to be around 300. The floor now for Minneapolis wheat is around 480, 450. I think we see something similar to that, a new range during this commodity super cycle. We still haven't broken out yet. We still haven't broken out. These are big bases, and keeping an eye on these grains and softs and other markets. We're going to see some big moves here potentially in the next 5 to 10 years. Now, zooming in, if there was a level for Minneapolis wheat similar to Chicago wheat to identify our risk and trade against, call it 813, it's already broken through it. Right? This is a market much like Kansas City wheat that is still stuck in the midst of a downtrend, showing no signs of a potential bullish reversal, undercutting a shelf of critical former highs. 2017, I remember that rally. Look at that rally. Spencer, that rally was ridiculous. I had just come back from Mexico. I was down surfing in Mexico. I was literally in the airport, the small town in Mexico, flying home, buying wheat.
I'll be honest. In 2017, wheat was not on my radar. All right, so
one of my best trades that year. Euro was another good trade, and Canadian dollar.
Do you remember like how it played out? Like obviously the chart says it all, but how and why that kind of happened?
I don't remember why. I think it was more. I think it was a weather. I think there were weather markets, because that was in June. June, July. I think it was July. I was down in Mexico in July. So yeah, it was a weather market if I remember correctly. But me, I'm not,
Yeah, I
focus more on the why now.
I know.
In 2017, it was pure price back then. Yeah. But zooming in on the Minneapolis wheat chart, again, look at the momentum in the lower paint. Bearish regime getting overbought last July, or July of last year, getting overbought in the spring. Again, it's down in the low 30s, and it's in a bearish regime. These are characteristics of a downtrend. It's printing fresh lows. It completed this, arguable, head and shoulders top. We got this hard retest in the summer. Right? I consider a hard retest as when price, comes back into the pattern and closes within the pattern in question. And then fresh lows. I mean, this isn't a market where I want to step in and take a swing. Not like Chicago wheat. Totally different picture, right? Totally different picture here. But what's interesting, I'm not going to get into it today, but something to get into in the coming weeks, is look at the overlay chart with Minneapolis spring wheat. And I'm pretty sure I've shared this before, and natural gas futures. Pretty wild. Pretty wild. I even left the fib, the retracements here. Like I'm impressed. Maybe, if anything, it looks like Minneapolis wheat might lead at significant tops, like it did in 2007. It did in 2022. So yeah, haven't really dug in and done the work here yet, but I got a feeling that maybe we have a similar situation here where natural gas tends to lead Minneapolis wheat. So still keep my eyes on natural gas for a breakout. It's challenged its shelf and former highs numerous times this year. We'll see if we finally get a breakout as we head into one of the more bullish seasonal periods of the year for natty gas.
So what's interesting about this chart is it looks like, broadly speaking, they are correlated, but every so often those correlations invert, and
Yes.
it happened in, what's that, 2010.
Mm-hmm.
uh you could argue a little bit in 2012, 2016, and now, right? I sort of, I mean, they're converging. So
Yes, and it's the same situation with crude oil and Chicago wheat, and that's why I didn't necessarily want to dive into the correlations so
yeah,
much as
yeah.
when do they bottom, when do they hit critical inflection points and really start to rip in one direction. That's what I loved in Bartoloni's presentation. I mean, I love his stuff. I think it's really, really interesting. I don't understand it. I don't understand it, but
You
I
and me
just I
both,
love it.
man.
I
You and me
love it.
both.
And that's kind of what he, is what he was after. He's after these critical inflection points so that risk is so well defined, that you can really take a strong position and benefit from a heavily skewed risk to reward proposition.
Yeah, Bartoloni gave a presentation at the tail end of our chart summit event on Wednesday. Ian was also there. Ian's presentation was a fan favorite. If you haven't seen these presentations and you want to, they are available for free. Just use the link that I drop in the chat. It's chartsummit.com. Just all you gotta do is enter your email, and you get full access to all the presentations and the slide deck that we compiled from the event that was a couple days ago, and lot of great feedback from it. A lot of great feedback on Ian's presentation. Ian, I think you went for like 25 minutes, a half hour. You may have had one of the
Sorry.
longer. I think you had one of the longer presentations over the course of the 2 days or a day and a half. But it was great, man. We asked people who were your favorite presentations, and we had several people say Ian. So
That's great. Thanks,
yeah,
man.
you had some good feedback on that. Okay, any questions about crude oil or wheat, or any of the wheat for that matter? Speak now or forever hold your peace. We try to hit on different parts of the currency, commodity, and fixed income markets every show that we do. So we may not talk about wheat or oil again for a few weeks. And on that note, if you have any particular requests or markets you want us to look at on future shows, please do drop them in the chat. You can always email us or tweet at us. Those emails and handles are at the bottom of the screen. They're scrolling, so do that. Yeah, that's the great question, G Diaz, is how can we play wheat in the stock market? I have my own responses, but Ian, do you want to take that first?
WEAT is the wheat ETF.
WEAT, to my knowledge, is the only wheat specific ETF. There are a handful of other broader ETFs that include wheat. I think actually somebody emailed us the other day, and I responded to it with let me find it real fast. Somebody had asked us specifically for a list.
DBA is another good one
of ag ETFs.
Yeah, DBA is another good one here. I'm going to drop a chart real quick to have these open right here on the fly.
And I'm going to find this here. I got it. Okay, so Yeah, as far as agricultural, exposure in the equity markets, it's not the easiest thing. So there's wheat, WEAT, like Ian said. That's a wheat specific fund, and then there's a broader agricultural fund that wheat is part of called DBA is a ticker for that. That's from Invesco, and then there's always the agricultural stocks, the agribusiness stocks, right? And there are ETFs for that. So MOO holds agricultural and farming stocks in it. That's the biggest one by a mile, the biggest ETF that is. So check out Moo, check out DBA, check out WEAT.
ADM.
If you
ADM's a
want,
great company too.
ADM, I believe Archer Daniel is the largest component of Moo. Let me check real
Okay,
fast.
that makes
Let me
sense.
check on that. I am very wrong. It is the 1, 2, 3, 4, 5. It is the sixth largest holding in Moo. So again, that I would start there. Start with those tickers, and the beautiful part about ETFs is you can always drill down at the individual holdings. And look at just use the ETF as a source of ideas and find companies that way. So ADM is really the biggest agricultural stock there is in the U.S. And that's how I would do it. That's how I'd play wheat. One of those ways. So Moo, DBA, wheat, or ADM. Those are kind of the main ways to play wheat. And then there's always the futures market, obviously. Right.
Well, I'll do a deep dive on these ETFs and companies and put together a good list and highlight the best charts here.
I've been trying to get the head of Tucrium funds on this show. I'll keep trying. I've talked to him before. His name is Sal. He's a nice guy. Try to get him on the show one of these weeks, and he can talk about the wheat fund, the corn fund, the soybean fund, the broad agricultural fund they have. So I'm still working on that.
Yeah.
Still working on that.
That'd be cool.
Okay. We ripped through all those charts, right? That was it.
Yeah, I know. It's what, only 10 charts, 11 charts this week versus I think we had like 45 charts last Friday.
Yeah. Last Friday's show went long. So if you missed it, check it out. I think we started late and we ended later. So
like I said, still a little hungover from the chart summit.
That's okay. All right. What should we talk about on our next show? Giovanni, can you guys see the crack ETF, the crack spread? Man, every time I see crack ETF, that's weird. I can't believe that the SEC allowed that. But yeah, we can talk about the crack spread a little bit next week. Perhaps we talked. Ian, didn't you mention that at Chart Summit?
No, I didn't mention it at Chart Summit, but we highlighted it today on the.
Oh, it was this morning. It was this morning, right?
Yeah, we talked about it. I think last week, Tracy mentioned oil refiners and that she really liked oil refiners in the coming 3 to 6 months. And if you look at the crack ETF, it looks good. It looks like it's ready to go, or it's on the verge of breaking out again. These patterns, these basing formations, topping formations, consolidations, they all need to break out. They all need to either absorb that supply or take out the demand. So it hasn't done it yet, but it's on the verge. However, the crack spread's breaking down to fresh lows. It's undercutting a shelf of former highs. And with the crack spread, I don't know necessarily the level that's really all that important, as it is the trend. Trend's lower right now for the crack spread, and that's not a positive development for refiners or for the overall energy space and crude oil.
Okay. I think that's a good place for us to wrap it up. Any questions, comments, concerns, you can always email us. If you want to get Ian's research, the best way to get Ian's research and all of his charts and access to the man himself is by subscribing to All Star Charts Premium, which you can do in the link below in the description. And thanks to all of you for hanging out. We'll be back on Wednesday, same time, 11:30 a.m. Eastern time. In the meantime, if you'd be so kind, hit that thumbs up. We'd appreciate that. And have a great weekend. We'll see you guys in October. Can you believe it?
I can't.
Crazy. Time flies. See you, everyone.
Have a great weekend.